Reliance Industries trades higher following a bullish note coming in from JP Morgan. The brokerage has an overweight rating with a target of 1568 rupees on the stock. Anticipates an improvement in earnings over the next 2 years.
The one-way rally in Garden Reach continues. The stock rallies 5% as it signs an MOU with Germany's Carsten Raeder to construct 4 multi-purpose vessels. The stock has surged close to around 80% in the last 1 month.
NTPC Green gains after the company signs a power purchase agreement with the Uttar Pradesh government.
And Mahindra rallies following the bullish note coming in from HSBC. The brokerage is expecting the EV profitability to improve and has a buy rating on the stock with a target price of 3,470 rupees a share.
Spun Living jumps over 4% as Jefferies initiates coverage with a buy rating and a target of 185 rupees, expecting the company to be a key beneficiary of the potential trade deals with the US and EU.
Hello and welcome to Chartbusters. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel. With me is Mangalam. And as you can see to the top of the screens, all the frontline indices are trading well in the green. The Nifty has hit a century. The Nifty Bank, well, that's warming up right now. It's up only around 50 points. But the breadth of the market is very, very good. So you have 3 stocks, Mangalam, that are advancing for just 1 stock that's declining. And I think the stock of the last few trading sessions has been eternal. You just pull up the chart out there. Currently, it's up close to around 5%. In the last 1 week, the stock is up close to around 12%. It went down to around 220 rupees, and from there, it's seen a big bounce. There was that MSCI and FTSE rejig, and that amounted to close to $900 million of selling. All of that has been gobbled up, and the street is just looking ahead because the domestic holding, DI holding, in fact, has been very, very high. Hey, Mangalam.
Hi, Nigel. You know, liquidity the liquidity went out of Eternal, and that stock is now surging. Prospects improving for quick commerce as well. That's doing extremely well. We've seen Swiggy see a bit of a rise in the last few trading sessions as well. I'm looking at a couple of other stocks too, which are spiking. Brain-based Solutions reported a not so good set of fourth quarter numbers. The stock went all the way lower. In fact, from its highs, it's nearly halved. But last 2 trading sessions, it's been picking up. This week itself, that stock is up around 15%. So watch out for that one. It's up around 9% out of the blocks directly, up 9%. And the other one that I'm looking at is United Spirits. This morning we had a note coming in from Citi. They're positive on the stock. They believe that the regulatory environment is turning favorable. They've taken some management meet takeaways, but the important part here is that nothing has changed overnight for them. It's just that now brokerages are coming to terms with the favorable regulatory environment, and going forward, maybe the margin sustaining for all of them as the India-UK FTA comes in and aids premiumization for them as well. So broader markets doing well for the second day running. The Nifty Bank is not doing as well as the broader markets, but no complaints out there. Closer to an all-time high, just around 400 points away from an earlier all-time high for the Nifty Bank as well. Let's get in Sachidanand Uttekar from Trade Bulls for a quick technical check on the market. Sachi, your thoughts on the frontline index? It's been consolidating with a positive bias.
Good morning, Mangalam. Good morning, Nigel. Clearly, I think the start for the Nifty has been really significant. It has managed to sustain its opening and about the 24,600 mark. And I think for the day, that looks like a base. But for further strength, it needs a breakout above that 24,830 zone. So I think the contribution from Nifty Bank would be significant. As of now, even if you look at Nifty Bank data, it looks difficult. The trading range is placed somewhere close to around 55,500 on the lower side to 55,800. So we may see some consolidation in Nifty Bank. But the bias for Nifty remains positive. Even if we see a decline, it's a good idea to build long positions, keeping a stop loss at 24,630 on the lower side with an expectation of a breakout about 24,830. When we look at stocks, it has been a very significant move for SRF. Even right now, after a 4 days rally, the stock is, showing further signs of strength. The ADX has started moving towards that breakout zone of 25, and that's why we believe that the current momentum may extend towards 3260. We are recommending fresh long positions here, keeping a stop loss at 3074 on a closing basis. Intraday target is placed at around 3180, followed by a positional target at 3260. The other stock which we have recommended to our clients is Astral. Even here, if you look at the overall move, it looks like a bullish flag formation on the daily scale. The breakout has been sustaining about that 1520 mark. We are expecting that the move can extend towards its 200-day exponential moving average, which is placed at around 1578. And hence, we still recommend building long positions in Astral, keeping a stop loss at 1518.
Okay, all right. Thanks a lot for that, Sachi. Well, let's focus on a couple of stocks. This morning actually had Welspun Corp that had come out with a small order win of close to around 450 crores approximately. But the order book is already at around 19,500 crores. So as we speak, Welspun Corp, you've seen a big spike up on that one. This is Welspun Living. Pull up Welspun Corp. That's made a fresh 52-week high today. Good order book visibility, and they're just piling in the order. So that's the stock that, in fact, it delivered its set of numbers. The stock has rallied more than 20% from delivering that set of numbers, good visibility, good order book as well, and clean balance sheet. Explains why the street likes it. But talking about the Welspun Group, let's talk about Welspun Living. That's surging because Jefferies has initiated a buy rating on the stock. Sudarshan joins us to run us through the key highlights of that note. Sudarshan?
So today, Jefferies has initiated coverage on Welspun Living. It has a buy call on the stock and target is rupees 185 per share, implying an upside of almost 40% from current levels. It believes that company is going to be the biggest beneficiary of potential trade deals of India with US and the EU. While it believes that FY26 is going to be muted for the company on the back of trade uncertainty, but over the next 3 years, that is from FY25 to FY28, it believes that company can deliver 18% EPS CAGR, but mainly positive on the back of potential trade deals of India with US and the EU.
Take that point, Sudarshan. Thanks a lot for that. So, beneficiary of the trade deals with India and EU. Keep an eye out on some ideas for profit coming in from our colleagues at Money Control Pro. We do have a bunch of stocks which are rallying. Which of these are the ones which are being suggested by our colleagues? Khushbu Rai Gupta joins in with something that she's been tracking. Khushbu.
In today's idea for profit, we have Godrej Consumer Products. The company is on the cusp of a steady structural growth and is building a future-ready portfolio by handpicking high growth and under-penetrated categories. The earnings growth trajectory of the company is strongest among the peers, led by volume revival in the home care category backed by strong seasonal tailwinds. Although the palm oil inflation has weighed down on the domestic margins, the global business simplification drove sequential EBITDA margin expansion on a consolidated basis in the March quarter. The stock saw an uptick after the government announced a cut in the import duty on crude edible oil from 20% to 10%, as a reduction in the oil price will lower the input cost and aid margins in the coming quarters. The company is also working towards expanding its addressable market by deepening its rural play and expansion in the niche categories. While the boost in consumption growth due to the tax relief could unlock new growth drivers, the strong execution across domestic and international business and a focus on the premium growth categories will help the company to post consistent earnings growth.
Right, with that, we'll slip into a short break. On the other side, all discussion around the banking space. Sources say the RBI is internally discussing whether to allow foreign banks to have a higher stake or higher shareholding in Indian banks. Harshvardhan of Bain & Company joins in to discuss the other side. The Nifty Bank is still holding flattish, just above the flat line. The Nifty, however, continues to hold with gains of about 100 points. A couple of stocks which are buzzing around this morning, apart from the ones that we mentioned earlier. Jindal Stainless has come up for, monitoring on the radar, up around 2.5%. Most of the gains coming by in the last 20 minutes or so. SJVN is the other one, which is up around 4%. Laurus Labs and L&T Finance are the other two which are making highs of the morning so far. On the downside, though, this morning we saw good gains come by for Avenue Supermarts, but now it's seen some selling from the top. Currently at the lower end of today's trading range, it's corrected about 2% from the high, so somewhere in the middle of the move that we've seen today. But let's talk banking. CNBC-TV18 learns that the RBI is internally discussing whether to allow foreign banks to have a higher shareholding in Indian banks. Remember, the current limit is 15%. The internal RBI discussions are on to raise this limit. Lata joins in with more. Lata.
Yes, that's right. What we are picking up from sources close to the Reserve Bank, who were formerly very in the Reserve Bank, tell us that discussions are on internally to check whether this limit needs to be raised. At the moment, as you said, the limit is 15%. And first, everybody in RBI will have to come on the same page, and then they will probably put it out for a public discussion. So until now, it is really at a preliminary stage. Now, incidentally, Reuters has also reported today that Reserve Bank is signalling possible, that is their words, signalling possible rule changes ahead that would let foreigners own more of India's banks. Now, as I told you, the current limit is 15%, but there are two major cases where an exception was granted. One was Fairfax allowed to own 51% in Catholic Syrian Bank from a long time, and more recently, SMBC, Sumitomo Bank, has been allowed to own 20% in Yes Bank. Now, the chances are that the Reserve Bank and the government are also preparing for the IDBI stake sale. LIC and government want out, and there is a lot of interest from foreign banks, and they, even Money Control broke a story saying that one of the front runners is Emirates NBD, and there, of course, nobody would want to come for a 15%. You want to sell a larger stake. That could also be one of the reasons why this thing may be speeded up. I'll just tell you the current constraints. There are a lot of constraints on foreign banks. The first constraint is overall. Everyone can own, can have only, any one entity can have only 26% voting rights in a bank. You may own 50%, whether it's Fairfax or SMBC. If they own more than 26%, the voting rights will be capped by 26, and that is not within the purview of the Reserve Bank. This is the Banking Regulation Act. So it is within the purview of Parliament to change it. And we have no information whether they're thinking about it. Foreign banks which come as branches, like, HSBC, Stancy, Citi, they have very severe license restrictions on getting additional branches. But if they come and set up a wholly owned subsidiary, they are treated like any other Indian entity. They can open branches without taking RBI permission. The other big rule governing all this is FPI plus FDI in banks can reach only 74%. That is the other limit. These are all the limits that are already in existence. The only thing that is being mulled is whether to allow foreign banks to go beyond that 15%, to remove that rule. We also try to ask our sources whether generally private sector, manufacturing and other companies will be also allowed a greater stake. We were told that that is not up for discussion.
All right, Lata, thanks a lot for that. To discuss this and more, we are now joined by Bain & Co. Senior Partner, Harsh Vardhan. Thanks a lot, Harsh, for joining in. I mean, you've heard the story, you've heard the possibilities. What are your views on both sides? Because on the one side, it will be obviously good that more capital comes into the country, foreign capital comes into the country with technology and management expertise, etc. But on the other, it opens, the country to another sort of risk as well.
Yeah, I think the risks are overstated. I think this is a very welcome move. We should have done this before. Our banking system is very large now, and it requires a lot of capital continuously to be infused. We can't be entirely domestically capitalized. I think we are way past that size now. We have 17 trillion or so rupees of capital in the banking system. Even at 15% growth, you need 2.5 trillion rupees of capital every year. Now, banks will not generate that much internally post-dividend. So I think we need to open ourselves for foreign capital. And remember, it's not just, we already allow FIIs up to 74, as Lata said. However, we need more permanent capital. We need capital that is strategic, which will be involved in the management and improving governance of the bank. As you said, they can bring expertise and so on. So I think this is a very welcome move. I mean, historically, last 20 we have done that only when we had to rescue troubled banks. Yeah. I think that experience is rich. The regulator now understands how to deal with foreign ownership. So I think we need to open our gates. I think this is a very welcome move.
Yeah, I should have added in the exceptions that LVB was also handed over.
I was about to say that, that was also
TVS. Yeah, but that, since it is not a listed stock, we didn't get into it. But that's an important, giving over to a foreign bank. But Mr. Harshvardhan, what is your sense about foreign interest itself if this 26% voting cap remains?
Yeah, I mean, I think progressively you might have to relax that, and including that 24% voting restriction, because how does a strategic owner improve governance if it remains a minority? I think that's a question we'll have to confront, but we have to go in steps. So I think initially people might still be interested. Look, Indian banking is one of the few jurisdictions in the world which grows at double digit and generates a 12-13% ROE as a system. There are not too many banking systems like that. So I think there will still be interest if you look at any of the global banks, which markets remain for them where they can see this kind of growth. So I think even with the 20% restrictions, there would be a fair bit of interest. However, I also feel over a period of time, we'll have to re-examine some of these other restrictions like voting rights and so on.
Okay. What other restrictions do you think Reserve Bank may put? I mean, they have that fit and proper qualification, even when you go beyond 5%.
Yes.
Are they likely to do something else? I mean, would they want to ring fence the capital and not allow it to go out? The point that Mangalam also asked you.
Yeah, I mean,
would you expect that kind of rules?
That is the whole point of moving from branches to wholly owned subsidiaries. Because in branches, the capital is fungible. It can come in and go out easily, whereas in a wholly owned subsidiary. So therefore, if this is allowed in an Indian incorporated entity, the capital becomes ring-fenced automatically. I think what they would, obviously this will be not automatic route. So RBI will diligence the entities that are applying for this level of stake. And I think along with that, they will, I mean, in terms of board seats and all, they will put some restrictions. But that will be certainly better than what we have today, right? I strongly believe, yeah.
Okay, a final question. Would you expect it sooner rather than later, since the government is pretty much in a hurry to sell its stake in IDBI?
I mean, IDBI has taken, 3 years now? And I think it's the time that they... And remember, there is also a pipeline of future PSU privatization. Capitalizing these private public sector banks is a huge fiscal drag on the government. So at some point of time in the future, next 10 years, I would imagine we'll see some more privatization. And we need to be ready for that, because the only entities who could do that, participate in that, is other banks, foreign banks, by view.
Okay. All right.
Just out of curiosity, from a stock market standpoint, how should one look at this? I mean, is it foreign capital coming into existing banks, and as a result of which maybe there could be better valuations available for them, or do you look at it as competition for banks which are not listed, and as a result of which maybe derating?
And just to add to Mangalam's question, which also was occurring to me, if this rule gets passed, let us assume that in a month, Reserve Bank actually announces that we are removing that 15% limit. Do you think PSU banks will jump in the hope that, IDBI has shown the way and others will follow?
Yeah. Look, I'm not a stock market expert. You guys know that better. Generally, I believe this is a positive news, significantly positive news for the Indian banking, because you are opening gates for a significant amount of capital come in and strategic capital to come in, which is always a good news.
Okay.
All right.
We'll leave it at that, Mr. Harshvardhan. Pleasure having you with us, and thank you very much for the perspective and for the understanding that you have brought to the subject. So now it's over to the Reserve Bank. Let's see what they say. Surely that question will be raised in the press conference tomorrow.
Take that point. But Lata, just from a narrative standpoint, if this was to get passed, and you said that maybe, PSU banks will jump, perhaps, if at all this happens, on hopes of any sort of this thing coming into PSU banks, etc. From optics perspective, from a culture perspective, from a narrative perspective, how would the actual thing happen on ground? Because from a stock market standpoint, it's very easy to say, that this bank has been taken over by some foreign company, etc. So it should be valuation. But from a
very valid question. It's not happen. It cannot happen tomorrow or next year, because the Banking Regulation Act has very many restrictions on public sector banks, or they're almost treated like government companies.
Exactly.
The CVC looks into their books. So the first rule that will have to be brought on is that government stake in public sector banks has to come down below 50%.
Right.
Even that is not on the cards. Banking Regulation Act and the Takeover of Banking Companies Act, I think it's called Banking Companies Act, requires the government to have over 51% in banks. First, that has to be removed. Will the government be politically open to that? At the moment, they have not shown the inclination. So it's a very long way.
Okay, all right, Lata. Thanks a lot for joining in and taking us through that discussion. For the time being, we slip into a short break. You come back. We continue to focus on markets and on a couple of stocks that are moving around. Don't go anywhere. Welcome back. Well, if you just take a look at the markets, the Nifty Bank, that's the problem pocket, because that, in fact, has moved into the red as we speak. So I think we should get the intraday chart of the Nifty Bank up for you on the screen. But otherwise, individual stocks, well, plenty of movers. You have Brainbees, that's moved to the high point of the day. So get the intraday chart out there. That stock has moved up. PNC Infra, just take a look at the big move out there. Nuvama, they had come out with a note and they were highlighting that the monetization of some projects. Earlier, they were barred by a couple of regulators. Now that bar as well has come off. So now, in fact, they can go ahead and bid for projects. So as we speak, that stock is up close to around 10%. Vishal Megamart, not very, very cheap. But that stock, after pulling back, well, now it's rising and it's up close to around 4%. And I think yesterday we had Jay Bala as well on the channel. He was talking about Purvankara as one of the technical picks that he had spotted. Yesterday, the stock rallied. And if I saw that correctly, currently as well, the stock is up close to around 10%. So that's another stock, 30% in a single month and moving on large volumes, Manglam.
Take that point entirely, Nigel. You know, Purvankara is in a movement league of its own. But just a point on all the real estate stocks as well. Just the last few minutes, we've seen actually a lot of these real estate stocks move higher. So we have Prestige Estates, which has moved to the high point of trade. Pull up, Oberoi Realty, that's moved higher. We have Godrej Properties as well. In fact, a better way to do that is to just look at the Nifty Realty Index, and that would tell you that it's moved higher. Most of the gains coming by in just the last 15 minutes or so. On the other side, though, the auto index has seen a bit of a drop. Why is that? Because M&M has fallen from the top. It's at the low point of trade. Maruti Suzuki too has moved lower, and Eicher Motors too has given up its early gains right now in the red. A couple of other stocks which are doing well. Yesterday we spotted the dairy sector, and now we have for another day in another day running, we have Heritage Foods, which has moved higher. So day before yesterday it was Dodla Dairy Stern, yesterday was Hatson Agro, and today we have Heritage Foods, which has moved to the high point of trade. What we'll do is, on that note, take your leave on this edition of Chartbusters, but you stay tuned. Trading Hour comes up next.